Thank you everyone for joining us today for the Aspire Technology Partners webinar, focusing on cyber insurance and the latest security controls and best practices. All of you are hard muted, so throughout the duration of the presentation, please be sure to use the Q&A box for any questions. We will pause at the end to address any questions that do come through. Next slide. So for the agenda today, our experts will offer best practices and help you manage risk. We'll cover a view of the cyber insurance market in 2023 and potential impacts on your organization, cyber insurance requirements and the avoidance of punitive coverage terms, and the latest security controls and best practices to protect against cyber threats and differentiate risks to cyber insurers. Today, we are also offering all of those that have attended today for the duration of the presentation. You're automatically offered into a drawing for a free Apple Watch. So good luck. If you are joining us today by phone, please make a note to your account manager that you did join, or send an email to marketing@aspiretransforms.com, just so that we make sure that we have you accounted for. We look forward to the presentation and thank you all for joining us today.
Yeah, good morning, everybody. So my name's Doug Stevens. I've been with Aspire for a little over 17 years, and I lead our managed service practice. And before we kick things off and I introduce the other presenters, I wanted to take 2 minutes and just introduce Aspire to those folks on the call that may not be familiar with us. So first and foremost, Aspire's been a leading regional systems integrator for 18 years. Really strong business where we take a very consultative approach to understand our clients' business challenges and then help them to align technology infrastructure to help them achieve those outcomes. We have really strong both pre-sales and service delivery expertise in each one of the practice areas where we focus, those being enterprise networks, collaboration, cybersecurity, which we're going to focus on today, data center and cloud, mobility, and IoT. And typically, we're getting involved very early on in the project lifecycle. So helping with planning, requirements definition, and then moving into solution design, and then, of course, implementation and deployment. And out of that project lifecycle, sort of a natural extension to that has been managed services and taking on the ongoing operational aspects of those solutions. And over the years, we've built what I refer to as a very high-touch, robust portfolio of managed services that include traditional NOC services, managed collaboration, as well as managed detection and response, which we're going to touch on later in this presentation as well. So all delivered from our Network and Security Operations Center here in New Jersey. And then the last piece that we're very well known in the industry for is having very senior engineering resources. So a lot of experience, they bring a lot of perspective into the engagements and ensure that customers are achieving those outcomes that are intended. And then along the way, a couple other core strengths as well, very strong PMO to help shepherd projects through to completion on time and on budget. And we also have a very mature customer success practice that focuses on things like training and adoption and ensuring that our customers are getting the true ROI on those investments in the technology solutions. So as I mentioned earlier, our focus today is going to be around cybersecurity. And I'm very happy to introduce, I'm having trouble advancing slides here this morning. There we go. I'm very happy to introduce a colleague of mine, Michael O'Connell, who's a security solutions architect in our cybersecurity practice. And so he's going to join us in a few minutes. But before we do that, I also wanted to introduce Sunil Jain. And Sunil is the co-founder and CEO of Marius Insurance. And we also, from Marius, have a panel of experts as well. We also have Ben Grosser, who's also a co-founder, and he's their chief underwriting officer. And we also have Robert Granadino joining us, and he's a senior strategy consultant with Marius. And so I'm looking forward to the insight from the Marius team as we progress here. But without further ado, I do want to hand it off to Sunil. So Sunil, take it away.
Perfect. Thank you so much, Doug, and good morning, everyone. Firstly, I want to thank you all for joining in today, and a big thank you to the Aspire team for including us in today's discussion and for really taking a proactive approach in helping customers think about their cyber risk exposure and their cyber insurance needs. So my name is Sunil Jain. I'm CEO of Marius. We are a specialty insurance broker that focuses exclusively on cyber insurance. We're happy to be here today to give you an update on the state of the cyber insurance market and what it means for your own enterprises. Next slide, please. So before I get into the state of the market, I want to give you a brief overview of what the product currently is. I do this because today's policy and coverage options tend to vary by insurance company, and we find that many enterprises think they have full cyber coverage, but they often have missing coverage components, restrictive limits, or overreaching exclusions. So the policy is generally broken down into three topics: first-party coverage, third-party coverage, and cybercrime. First-party coverage covers for losses you incur yourself from a cyber incident. This usually includes breach response services to help you identify and remediate a breach, as well as business interruption to cover expenses and lost income during the period of restoration. Next slide, please. Third-party losses are liability losses arising from lawsuits, regulatory penalties, costs, and such. This is what most customers think of and expect from their cyber insurance policy. Next slide, please. Cybercrime are specific types of incidents that normally have specific retentions and sublimits. This includes such things as funds transfer fraud and invoice manipulation. These are generally the coverages within a cyber insurance policy here, but where and how it is incorporated into a policy will usually vary by insurer to insurer. Next slide, please. So with that as a groundwork, what's going on in the marketplace today? Most of you understand that the past few years have been very trying for customers and insurers, but a lot's changed in a short period of time. If you look around at what people are saying, it seems like a mixed bag. Some think that the market is back and strong. Some think that cyber insurance is a lost cause. Some think that the high prices are here to stay. Next slide, please. To add some data to the discussion, let's look at the price changes over the past couple of years. Now, this won't be news to anyone, but the rates increased dramatically over this time frame. Prices are about 2.5 times more expensive than they were at the start of 2021. It's pretty evident that carriers misunderstood this risk and have been making it up for it by raising rates. The first part of 2023 seems to suggest that prices are stabilizing a bit, perhaps flat or slightly up from Q4 levels, which hopefully will provide some relief to you all, but maybe not that much. Next slide, please. If you look at the underwriting performance, you'll see that insurance profit ratios were strong in 2017 through 2019, as insurers had false confidence in their rates. But this evaporated quickly in 2020 and 2021 when an onslaught of claims arose. On average, the insurance industry gave up profits in these 2 years, but at the extreme, many insurers like AXA, Liberty Mutual, and AIG saw huge losses in their cyber books. Next slide, please. If we look at where these losses came from, most people tend to think that ransomware payments are the leading cost, but that's actually not the case. We're still waiting for 2022 insurance data to come out, but Chain Analysis estimates that ransomware payments are down about 40% in 2022, as victims are generally better prepared for an attack than they were in the past. The biggest cost component is by far business interruption. Getting back to normal operations can take a lot of time, and all you know that time is money, as payroll need to be met and remediation work needs to occur. It's also useful to note that cyber criminals are learning and adapting as customers are less likely to pay the ransom nowadays. Thus, they're changing their tactics. In some instances, they're relying more on public humiliation tactics than hijack data to coerce a ransom payment. In other instances, business email compromise in combination with wire fraud is becoming a more popular tactic, where threat actors are gaining access to email accounts and finding ways to orchestrate wire transfers to their own accounts. The payouts in these instances are smaller than a traditional ransomware event, but the frequency, cost, and overall threat to you still remain high. Next slide. So if I had to sum up what we're seeing in the marketplace today in one word, I would say that we're seeing complacency. Insurers feel like they got burned for a couple of years and made it back by doubling or tripling rates. Now the underwriters feel like, okay, we're in a good spot. We have a handle on our books, and they expect to remain at this level of rates for the foreseeable future. They've been successful in enforcing higher cybersecurity standards, which we do agree with, but we're not seeing anyone saying, okay, let's figure out how we can improve pricing and improve coverage. We're still seeing price increases, though not as dramatic, and coverage terms and conditions tighten. Next slide, please. One important recent development comes from Lloyd's of London, which is estimated to insure about $1 billion in cyber insurance premium. Starting at the end of this month, in 3 days actually, they will be amending their exclusions in cyber insurance policies to more broadly exclude losses arising from war and state-backed cyber attacks. The goal here is to limit exposure to warring nations or coordinated cyber attacks emanating from nation states. By doing this, though, many fear that it will be increasingly more difficult for insureds to recoup losses, as questions may arise as to whether their cyber breach constitutes a state-backed cyber attack, or whether the coverage itself is sufficient enough given the broader exclusion. Observers believe that this could lead to Lloyd's losing potentially $200 million in premium. Here, it's important to note that insurance is a follower industry, meaning if one insurer, especially one of the largest in Lloyd's, makes a change, others are likely to follow suit. We do note that several US insurance companies have tried to deny claims from purported Russian-sponsored attacks in 2017, and could very well seek to add the same exclusionary language in their policies. We highly advise insureds to check new and renewal policies to see if similar language has entered their contracts. Next slide, please. To give you a perspective of what the landscape looks like, here are some of the top insurers in the market today. Most of these markets are now retooling and seeking to expand new business at these elevated rates. You'll see that markets like Chubb, AIG, and Lloyd's tend to play in the large enterprise segment north of $500 million. Markets like Travelers, as well as a bunch of insurtechs like Coalition and NatBay, play on the smaller enterprise segment and will offer better terms to target this segment. We will say that all of these insurers do play across different industries and different sizes as well. So you may be able to find coverage through any of these markets here shown. Next slide, please. So overall, we'd say the picture is not as dire as it was last year or the year before, but still has a long way to go to be appealing. So what can you do in today's market? We are suggesting a few things. Vitally, you need to be conscious of silent cyber. Silent cyber is cyber coverage that is embedded in other insurance policies you might have, like errors and omissions insurance or business owner's insurance. Insureds think that this coverage is comprehensive, but it's often limited with lower limits and tighter restrictions. At this point, for nearly all enterprises, we suggest that some sort of comprehensive or standalone coverage is necessary to provide you comprehensive first-party and third-party coverage at reasonable terms and conditions. We also recommend that you check your sublimits. Oftentimes, you may have a high aggregate limit, but coverages like business interruption, funds transfer fraud, and others will have lower sublimits and higher retention. Be cognizant of these sublimits, as the risk can still be great, and you don't want to be left holding the bag thinking that you're covered. Make sure that you have sufficient coverage for your enterprise's needs. Lastly, we would say that it's time to be more aggressive. The environment has improved a little in that rates have stopped increasing so dramatically and coverage offerings have stabilized. Insurer appetite for new business is growing. It's time to start pushing your brokers and insurance companies to offer better terms for prime accounts with superior postures. Speaking of postures, we would advise you to make sure that you and your brokers are properly advocating your cybersecurity posture. As customers and partners of Aspire, your cybersecurity posture is likely better than most other public and private enterprises. If you're utilizing endpoint protection, multi-factor authentication, immutable backup, then you should be making sure that your brokers are advocating this on your behalf to insurers. Usually in an insurer's rating plan, having any of these items should make you eligible for various credits, enabling you to lower your premium or make eligible higher limits. We advise that brokers effectively advocate for you to insurers so that they see exactly what you're doing to protect yourself and why insurers should value your posture and business. In summary, we would say that while the market has been volatile for the past few years, we think we've reached somewhat of a plateau, although it seems like we're at a plateau on a very high mountain, per se. The threat landscape is still quite dangerous, and we believe it still necessitates cyber insurance to cover breaches that may slip through your defense. Now's the time to get a bit more aggressive in your search for coverage. We do highly advocate that you make sure you implement an effective cybersecurity posture and ensure that your broker communicates it well to insurers to access all of the credits that may be available to you in your premium calculation. At Marius, we thank you for your time, and I'll kick it back to Doug and Mike for a deeper discussion.
Thank you, Sunil. So as Doug mentioned before, my name is Mike O'Connell. I'm the Security Solutions Architect here at Aspire, and we're going to go over the latest security controls and best practices to help protect your organization against cyber threats and really make a difference to your cyber insurance provider. So the first thing that I really want to talk about is what do underwriters really look for when you're looking at your cyber insurance coverage, right? So as Sunil mentioned, and they mentioned, ransomware is dramatically down in recent years, but it's not gone, and it is still there. So there's a couple things that I'm looking at, kind of 6 things that I recommend before going in front of an underwriter. The first thing is make sure that you are actively documenting any cybersecurity portfolio plans that you have in place. Make sure that your team and Aspire is here to assist you in that. You actively participate in quarterly or yearly tabletop exercises where we can come in and help you mimic a malware incident, mimic a ransomware incident, being able to see how your toolkits respond to a cybersecurity threat actor in your infrastructure. These are key critical items when looking at cyber insurance. Your insurer and your underwriter is going to want to see that you have a documented plan in place and you have tabletop exercises that your team and your managed service provider or MDR solution is actively working to remediate and constantly 24/7, 365 monitor and protect your organization. These will dramatically reduce your premiums and put your organization in the best security practice possible. So I'm going to go into kind of 6 recommendations here for starting that cybersecurity journey. There's a lot of buzzwords out on the internet, right? You have SASE, you have zero trust, and while those are frameworks, there's 6 key components when you're looking at it to help your organization for securing your coverage with your cyber insurance and mitigating any risk. So the first thing that I think is critical and everyone's probably read about and has in place, if you don't, it's a fantastic place to start from a cybersecurity insurance and just security practice, is the implementation of MFA, right? That's multi-factor authentication, or other people call it 2FA. But at the end of the day, it's a security feature that requires your users to provide 2 forms of separate authentication identification, right? So getting away from just the username and password. So there's a couple things that I recommend as a security solutions architect when you start thinking about looking at an MFA product. Number one, you want the MFA product to be able to give you some details on the endpoint or the user that's accessing the applications, right? You want an MFA product that can also do geographic blocking. If your organization only does work and your staff should only be accessing it in a certain geographic region, you want to make sure that you have an MFA tool inside your organization that's not going to let someone from overseas, if I have no business use case, accessing my organization's applications. And you want to go beyond just standard VPN, right? You want to go and protect all of your cloud-facing applications. Make sure all your documentation locations, whether that's SharePoint, whether that's OneDrive, Google Drive, for example, you want to make sure that you have that MFA integrated besides just the standard VPN. That's really where most people started the MFA. But for an underwriting and insurance perspective and best practices from security, you want to take that even farther. Each application inside your organization, you should be doing MFA on. And as Aspire, we can help you roll that out. And the MFA is a rolled out phased approach. It is not a light switch. No one should just be flipping MFA on to meet an insurance requirement. You want to make sure it's done correctly each step of the way. The next portion, and second thing that I'm going to recommend and Aspire recommends, is to have network segmentation and segregation, right? Making sure that critical networks, elevated networks, server and back-end level 15 and higher networks are segmented from your users. Making sure that you have the mitigation and risk strategies in place to make sure if you were to have a cyber event, whether that be ransomware, it cannot spread to critical data and infrastructure in your organization and bring your business to a halt. As Sunil mentioned, right, the biggest thing is business impact. The amount of time that your organization takes to recover from a cyber incident. So putting segmentation is going to dramatically help that. The third thing is data backup strategy, and this is critical to have an enterprise data backup and recovery. They're essential components to keeping your business running, number one. Number two, being able to get back into production in case of a ransomware or any security events. You want to make sure that you have a partner that can help you manage that data backups. What's the scope of the backups? Do you have recovery points? We want to make sure we don't need full backups every day, but whether that's incremental. But the first thing and key to ensure the safety of your backups is making sure that kind of ties back into that network segmentation, making sure that if there was a cyber event, that those backups are isolated and they're secure, and a bad actor cannot jump from the normal data network over to your secure data backup strategy. I think the fourth one here, and I think is probably the number one thing that most people have in place, but only have a baseline of policy protection that I think needs improvement, is endpoint detection and response and anti-malware tools, right? So traditionally, you have those legacy antivirus tools and anti-malware tools, right? But what you should be looking for now in an actual endpoint protection is a solution that does EDR, but also does XDR. And then people ask me all the time, well, Mike, what's the difference between EDR and XDR? Well, one of the biggest things and the differences between EDR and XDR is an endpoint detection and response software is going to protect your endpoint, right? It's going to provide in-depth visibility and threat protection for that single device. What you should be looking for, and what we do at Aspire, is we focus on not only EDR, but XDR. So we take a wider view, and we're looking at protection across all of your secure infrastructure, all of your endpoints, your cloud computing, your email, your total organization protection and response from a endpoint detection, response, and anti-malware solution. So if you're looking for an endpoint protection, or if you want to protect your devices from attacks, you really need to be looking at beyond just the standard EDR, but more of an XDR type solution. One of the biggest things Sunil mentioned earlier too is from an email perspective. So for the fifth item, recommend looking at kind of a SPF or a sender policy framework. It's an authentication method in your email that's going to make sure that there is no bad actors, that email wasn't redirected, there's no one in the middle. It's considered like a handshake that the delivery got, and it is who they say they are. So recommend looking at a email solution that has end-to-end protection for your organization. And then the sixth thing, and kind of the final thing that I want to focus on in here, is really looking at locking down. Have security experts like Aspire, myself, come in, review your existing configurations, and do this, every year. Make sure that legacy access control lists and network address translation systems that were decommissioned and removed from your organization. Make sure you're going through, whether that's the firewall, whether that's your endpoint protection, making sure that you constantly are updating your actual threat intelligence, and really look into looking at a managed detection and response provider, someone that you can rely on to have a 24/7, 365 eyes on glass, someone you can, if you have an incident, you can pick up the phone. From an IR response perspective, you want an organization like Aspire that's going to be here for you 24/7 to help you. And if you really focus on these 6 key items, you're going to dramatically affect your premium from an insurance perspective, but more importantly, put your organization in a safer cybersecurity policy configuration. And then I guess, Doug, do you think I missed anything? I think the big thing here is the tie-in from, having someone that's able to look at it and experts in the security arena, looking at the tools that you have in place to make sure anything's changed.
Yeah, for sure. No, I thought it was great input, both, from Sunil from an underwriting perspective and what they look for, and then from a practical, kind of security best practices standpoint, that checklist and top 6 from you, I think hopefully was very helpful to the audience. What I wanted to do, I just have kind of two messages I wanted to piggyback onto the input from both you and Sunil. And the first one is sharing some survey results. I thought it was interesting. Well, a couple of reasons. One, it was published last week, so it's fresh off the press, and 2, it relates to what we've been talking about this morning around security resiliency. And this is a survey that was funded by Cisco, but it was done by a third-party independent survey company. And it's in the context of this hybrid world we live in now, right? Where, post-COVID, we've moved from this static model of one user, one device, joining one network, to now we have, users that have multiple devices, and they're multiple locations, and they're connecting to multiple, networks. And we as security practitioners, we need to secure those users and secure that data wherever that work is getting done. So there's a lot of unique challenges in what we've been talking about this morning, and I wanted to share kind of where the market is. So the survey was conducted, double blind. They questioned 6,700 private sector security leaders, and this was globally. It was across 27 markets. And what they did was they measured the security resiliency of those organizations based upon the deployment of 19 solutions. They referred to them as sort of required defenses, and it's a lot of the things you were talking about, Mike, whether or not those required defenses were in place across these 5 pillars. So identity, devices, network, application workloads, and data. And what they did was they put those 6,700 organizations into 4 categories: beginner, formative, progressive, and mature. And the interesting thing that I thought was that 55% of those organizations were performing below average from a cybersecurity readiness perspective, right? So they're either beginner or formative. And so if you, as an organization, feel you fall into those categories, you're not alone. That may not, make you sleep better at night, but the message here is that we're still catching up. Post-COVID, we as security practitioners are catching up to, what the new reality is. And it's a journey, right? And Mike touched on it. It's not something where you flip a switch. It's something where, it happens over a period of time. And we can help you with that journey. And we can help you create that security roadmap to put you in a better place from a maturity perspective. And then the other thing, there was a couple of just, sort of interesting factoids that came out of the survey as well. And I summarized 3 or 4 of them here. The first is 82% of those respondents said that they expect to have to deal with some sort of security incident disrupting their business within the next 12 to 24 months. So that sort of emphasizes, the need and the importance of being prepared, right? And then 60% of those respondents said that they've actually dealt with a cybersecurity incident over the last 12 months. And of those 60, 41% said that the cost associated with that incident was at least $500,000. So again, that sort of speaks to the cost of being underprepared. And then the last data point here is that 86%, and this makes sense, right? 86% of those respondents are planning to increase their security budget over the next 12 months by at least 10%. And so there's that realization and that need for additional funding to address risk, to prioritize those areas that need more maturity and to close that readiness gap. So I thought that was interesting. The other thing that I want to emphasize, and I think it's so important, right? We talked about deploying and investing in these security defenses, right? These security tools, and that's super important. But that's only half of the equation. Really, the other half of the equation deals with security operations, right? And it's so important to have somebody looking at the security events that are generated by these devices in some sort of meaningful way on a regular basis. And the reason that's so important is, you can look at other research out there, and there's a bunch of different reports out there, but it varies from between 150 days and 206 days in terms of organizations' ability to identify a threat before it becomes a breach. And so what I mean by that is that potential threat, on average, is living within an environment undetected for a period of 5 to 7 months, which to me is mind-boggling and scary all at the same time. And the reason for that is sort of a popular misnomer, and that is that I think some folks think that, if I click on something, I get ransomware and, it's a bad day. But really the reality of it is most cyber attacks are not singular events. It's an ongoing process, dealing with, infiltration, reconnaissance, and then some type of exploitation. And once that foothold is gained within the environment, there's this period of time where the bad guys are trying to do lateral movement, or they're trying to get some type of privilege escalation, with the end game being either exfiltrating data, right, sensitive data, and selling it or whatever they do with it, or, encrypting that data in ransomware. And so the longer it takes for an organization to identify and respond to that potential threat, the higher the cost it is to mitigate and remediate, and the greater the impact, there is on the business. So that's why it's so important. And we know just, a lot of the folks on this call today are either in, kind of the K through 12, the SLED, or that middle market commercial space where there's similar challenges. There's not enough security people. They're expensive. They're hard to keep. Many of us wear multiple hats, so there's just not enough time in the day to do everything we need to do from an IT perspective, as well as, respond to alerts. And we know, too, from experience that if the tools aren't tuned properly, they generate a lot of noise, and it results in alert fatigue, and things get missed. And in addition, just the difficulty in being able to keep up with the evolving nature of these threats that we're seeing. And really the answer and the direction that the market is going in is managed detection and response. And I shared this quote from research from Gartner recently, and it says by 2025, 50% of organizations will be using MDR services for threat monitoring, detection, and response capabilities to mitigate those threats. And really the reason for that is, organizations, they're looking for improved visibility within their environment. They're looking for MSSPs to act as an extension of their IT organization to provide that detection and analysis process. And at the end of the day, they're looking for a business outcome. And that business outcome is, I want to minimize the time that it takes to detect and to respond to these threats to ensure that I'm managing risk in the appropriate way. And so, the value that a managed detection and response partner brings is is that 24/7 visibility across that cloud layer, the network layer, and the endpoints, and that I call it that security maturity, right? So now I have the security operations, I have the threat intelligence, I have the platform and that technology stack, and then the ability to prioritize threats. And so leveraging those security defenses and those layers of security is super, super important, but also the visibility and the security context that they provide an MDR provider is invaluable. It really gives you a comprehensive view and meaningful view of what's happening within your environment. So an MDR provider is going to ingest all of those security events, normalize them, correlate them, leverage, again, that technology stack and the SIM and the threat intelligence and automation and all of the rules and directives that are built into that intelligence to be able to very quickly filter out noise, focus on the things that are important, generate alerts, and then have security analysts that are 24/7, eyes on glass, triaging those alerts, eliminating false positives, and then being able to focus more analysis and investigation around those threats that are real. And then at the end of the day, what we're looking for there is someone to partner with you and in a collaborative way to provide that outcome, right? Faster detection to threats that are going to impact your environment. And at the end of the day, what are we buying, right? It's that peace of mind that, you know, I have somebody watching my environment 24/7 to identify and respond to those threats. And it's a fraction of the cost of what it would take to build it, you know, for your own organization, right? And depending upon the size of your organization, it could be even the equivalent of, you know, one additional full-time employee, right? And this is 24/7. It's, you know, if it doesn't go home at night, don't go on vacation, and, you know, it doesn't like to enjoy the weekends. So I'm going to wrap it up here, and really, I would say that, you know, we've covered a lot today, and I don't want it to seem like it's overwhelming. If you're in that sort of, you know, situation where you have limited resources, you know, find a good partner, outsource, you know, whatever you feel is appropriate to your needs to dovetail with your organizations. So, you know, leverage us. We can help, you know, we can help identify those best of breed tools that are going to be a good fit within your environment and fill those security gaps that we talked about. Find a partner that will manage that for you, right? And kind of eliminate some of that ongoing complexity around tuning and updating and that ongoing security operations, right? Find an MDR provider that's going to provide that 24/7 threat monitoring and be able to analyze and respond to those events in real time. And then there's other areas where MDR providers can add value as well. So whether it's vulnerability management, right, or patch management. And I don't have it here, but security awareness is another big one where companies like Aspire can really help you out. So, you know, the goal here is to increase the overall security, you know, maturity of your organization, manage risk, remove complexity, and put you in a position where you're going to have a more favorable, you know, policy and underwriting from a cybersecurity perspective. And you're going to be able to manage risk. So I guess my ask here as we close is, you know, if there's anything of interest to you, whether it's with the Marius team and some of what they talked about, or, you know, the tools or MDR, let us know if we can assist. We'd be happy to have a follow-up conversation and talk about your specific requirements. So we're going to reach out to everybody after the call, but feel free to reach out to us as well, and we can set up those conversations and dig a little bit deeper. So with that, I was going to pass it back to Katie, our host, and see if we have any questions in the queue that we can address before we wrap up here.
Yeah, thank you guys so much. Great presentation, great information. We did get a few questions in. If I have an MFA now in my email, where do I want to focus on step 2 for cyber insurance protection?
So if you have MFA enabled, from a lot of people start with email, anything that's publicly facing, So any cloud-based applications, anything from firewalling or any corporate resources that's public-facing, that's really where you want to focus on step 2. That varies for each individual deployment and organization, right? Each use case, but with a lot of people moving some things, off premises to the cloud, I harp over and over on public-facing access.
Thanks, Mike.
I would like to just touch base on that. In terms of the MFA, that does, from the insurance perspective, greatly reduce the probability of a incident. What really helps to also reduce the severity of an incident is the backup procedures as well. So if there are kind of well-documented and well-practiced procedures for getting back up and running with your data, that's going to play that's going to play very well with insurers in the future as well.
Great, thank you both. And one more I think we have time for. If I have workers still remote, what is your recommendation for advanced security?
So, a lot of organizations went hybrid remote, obviously with COVID, right? Some people are still doing that and will continue in the foreseeable future. First thing is your endpoint protection, but the second thing is you really want to be able to see, that the organization and when they're working at home or wherever they may be, that you have control over of what they're browsing, and from a DNS and HTTPS protection layer from an encryption perspective, you definitely want to look at that from the endpoint perspective too. So if you have endpoint protection, obviously first and foremost, the second thing is being able to control and make sure that your corporate resources are in fact doing corporate things when they're not in the office, just like you will with like a legacy prior firewall. I don't really want to say legacy, but being able to have that control of what's going on when the organization assets are not in the office.
Great. Thank you guys so much. I know we only have a few minutes left, so the remaining questions, if we did not get to them, we will follow up with you directly. But we just wanted to thank everyone for joining us today. As mentioned, if you did join the call, you'll be entered into a drawing for an Apple Watch. So we will be announcing the winner next week, the week of April 3rd. So stay tuned for that. If you have any questions that you did not get a chance to ask in the chat, please follow up with us. Our information is right here, info@aspiretransforms.com. You can also reach out and schedule a call. We would love to connect with you one-on-one and talk through more questions that you may have. But thank you everyone for joining us, and we hope that you have a great day.
Thank you.